Tomorrow can change everything for stocks. We can see the S&P 500 right near new all-time highs. The day before, we're going to get the infamous CPI report. So is this nothing more than setting up the perfect trading opportunity? Now, we come over and look at the last CPI report. Let's take a look. What was the contributing factors out there? Well, look at energy. Energy, we see right here, fuel and oil was actually down 0.3, but we see gasoline 1.9. We see energy commodities 1.7. Now, in previous times, we actually saw energy in the past has been making the CPI report not as bad as it has been. If we come over and look at crude oil is once again on the rise. Now, all this movement we've seen over the past few days is not going to be incorporated in tomorrow's CPI report. But if we go back and we look, for the month of September, what did oil essentially do? Oil basically did nothing more than go back and forth, back and forth. So I do not think oil is going to be a big rocket ship on the way up. But coming up in the near future, we got to be very concerned with this. Buyers of Russian oil now risk playing a high-stakes poker game as fresh sanctions on Moscow lift oil prices. And we just talked about that here right now. We see oil prices on the way up, but is this going to be nothing more than getting walked right back? And with the CPI report, this is very much needed, because in about 5 days, we're going to get the next FOMC meeting. We scroll on down. What do we see? The market is priced in a 98.9% chance that Jay Powell and company will be cutting rates at the next FOMC meeting. However, when we look at articles like this week's critical inflation report comes with a variety of doubts about the data. And speaking about the data, I want to remind you guys right over here from the BLS's website, scroll on down, sample and error in the CPI report. The CPI is a statistical estimate that is subject to sampling and error because it's based on a sample of retail prices and not the complete universe of prices. So regardless of what the CPI report is tomorrow, we kind of got to be careful about this. Keep in mind, the government has been shut down. So is this going to be another case where it's nothing more than a sample and error, showing us that inflation is indeed on the move back lower? Now we come over and look at how the indices fared across the board today. The Dow was up 144 points. The NASDAQ was up 201 points. S&P 500 up 39 points, with the Russell 2000 being up 3.07. Now we come over and look at advancing issues versus declining. We had 61% of issues advancing on the day. And when we come over and look at the sectors across the board, really no surprise. In energy, by far outpacing everything else. But once again, we see technology back on the rise again. Technology in the top 3 performers of the day. Now, when we come over and look at the fear and greed index, this is something we got to really consider. Right now, we have a reading of 28 at a time when the market is right near making new all-time highs. Then we just got the most recent investor sentiment survey. What do we see? Well, the bulls stepped up slightly. Last week, we had a reading of 33.7. This week, we get a reading of 36.9. Now, we look at the bears. The bears also dropped down a bit. Previously, they're at 46.1. Now, the bears are at 42.7. Now, something else that really contributed with the market rally today, U.S. equities extend gains after confirmation of Trump's meeting with China next Thursday. So is that going to be enough to go ahead and push us above all-time highs? And as we go above all-time highs, is this doing nothing more than setting up a major trap? Notice as we're almost at all-time highs, look at the MACD indicator. Is it going up? Absolutely not. We come over and look at the 4-hour chart real quick and notice we are right here. We are right on the edge of being able to break out this recent swing point and make it a run to all-time highs. Now on the 30-minute chart, notice today we basically ran up all the way from yesterday's low without a single pullback. And now if you look at the MACD indicator, even on the 30-minute chart, look how low it is compared to where it was when the market was rallying up just a few days back when it was trying to make new all-time highs. This is a clear warning sign out here. Now we come over and look at the futures markets real quick. Look right here on the 4-hour chart. We come down, boom, we came all the way back up, undoing that nasty down candle we had yesterday. And now it's looking more and more like we're going to go ahead and push above this recent high, which is going to be good news because keep in mind, right over here, we have an untested point of control at 67.92 and a quarter. We are almost there. Not quite there yet, but it's highly probable that level is going to get hit. But I want to draw your attention to something real quick. Today on the live stream, we had this mapped out. We were talking about this A to B, B to C, and we projected all the way up here for D. If you guys were on the live stream this morning, you guys saw that. And I did something I haven't done in quite some time. Instead of trying to fight the trend on the way up, Today, I kept trying to go in the direction of the trend, sometimes even buying the high of the day. But what does this mean for tomorrow as we look at the volume profile? Well, one thing I'm going to be watching is, do we go ahead after the CPI report comes out, we push all the way back up and we start coming back down below value area high? If that does occur, I want to see, all right, can we test the point of control? Below that, look over here at the high volume areas, 67.58-ish, and then down towards value area low. However, we got to be very mindful that tomorrow, when the CPI data comes out, if it's enough to break the new all-time highs, that this could be nothing more than a trap, and then we can see the markets come tumbling right back down. Keep in mind, it's been 4 weeks since we've had the weekly jobless claims come out, and we still have not received the non-farm employment numbers yet. Now, I'll let you guys know right now, Apex is back with the 80% off all evaluation accounts, pass in 1 day, and $85 activation fees. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. Come over, look at the dollar index today. Dollar index, a little bit of a wick on top of this candle. But then we come over and look at the yields. Yields popping up again. Now, are the yields telling us that, the numbers tomorrow might not be as good as some of the bulls may be liking? Well, we come over and take a look at the precious metal gold. Gold today, basically a spinning top type of candle. And there's two patterns that I'm really watching. And we can see this on the 4-hour chart. One, does this high right here hold at 41.75? If so, this could set up an ABC pattern down that brings us down to about 3,800 or so. We'll actually come down to 37.92. Keep in mind this double top number one, top number two, that target still has not been filled at 3,995. I still think that has a good shot, but something I'm watching is, do we get a rejection from this level here, or do we make it a little bit higher towards this structure breakout point, anywhere from 4234.7 down here to about 4196.5? Anywhere within this area, I'm looking for gold to potentially turn back down and head right back lower. And if we come out with a bad CPI report tomorrow, that could be the catalyst that actually gets gold going substantially lower. Keep in mind, gold previously has had 9 consecutive up weeks in a row, and then we're really at the threat of breaking that. Now, we do have quite the wick on the bottom of the candle and quite the wick on top of this candle in gold at this point, but the area I'm looking for gold to come down to is going to be right between the 50 and 61.8 fib level, somewhere around that 38% retracement. Now, when we come over and look at the QQQs real quick, on the daily chart, it's looking like we want to pop and make a new all-time high. However, right now, the MACD indicator is not confirming that at this moment. Now, that doesn't mean it won't change tomorrow after the CPI report comes out. But then on the 4-hour chart, what do we got going on over here? A little bit of the same, all right? We can say we have a low, we have a higher low, we have a higher low, and we continue to have higher highs on the way up. Now, right here, we did break above the upper channel. We came right back down. Let me just go ahead and pull this out here just a bit. We came back down below the lower channel, and now we're on the move back up. It almost seems a certainty we're going to make new all-time highs. But is it too easy? Is everybody looking at all-time highs? And could it potentially be nothing more than a trap? On the 30-minute chart, a big rocket ship on the way up, just a trend day all day long, really ever since the low from yesterday. But that could set up the trap, get everybody overly excited that the market's going to the moon. CPI report comes out, and not so quick. Now, we come over and look at the futures markets. We've had a pretty good move on the way up. We were able to take out the point of control, and we came down towards this high volume node. Now, as we start pushing up, notice the volume profile is going to start to get very thin up here, basically non-existent. And that's because the market has never been this high in time. Now, are we going to be able to break above this level? And right now, it looks like that's going to be the case. However, again, we got to be very cautious. It might be a little bit too easy. Now, today on the live stream, we also talked about this ABC pattern out here on the NASDAQ. We had the A to B leg, we had the B to C leg, and we projected all the way up here for D at about 25,258, and the market went just barely above that, and now we're just consolidating around that area. Now, I was hoping this morning we'd make it down, taking out the point of control at 24,910, but the market said, not so quick. We're going to reject and leave that right behind. And as I look at the volume profile, I want to be looking for something for tomorrow. One, are we trading below value area high after the CPI report comes out? If the answer is yes, I want to continue to look for lower prices. In the event tomorrow we are trading above value area high, then it's going to be a heads up. We got to be on the lookout for watching the market make another new all-time high. Now, if you guys like to see how you can get the volume profiles on your own chart so you can do your own analysis absolutely free using NinjaTrader Prop, then you want to make sure to watch this next video right here.